Welcome to Cold Brew Finance's U.S. End-of-Month Deep Dive, covering market moves in indexes, sectors, stocks, and global markets for the month ending Wednesday, April 30th, 2025. Kicking things off, I'm Max Profit. Key indexes were mixed this month. The Nasdaq Composite Index gained 123.35 points to 17,446.34. The S&P 500 Index and the Dow 30 Index both recorded their third consecutive monthly decline, with the Dow notably reaching a new one-year low. Market breadth reveals weakness across the board. The Russell 2000 Index showed significant deterioration, with 1,240 declining stocks versus 660 advances. The S&P 500 reflected similar weakness, with decliners outnumbering advancers by 300 to 197. Three-month returns highlight widespread weakness. The Russell 2000 showed the steepest decline at minus 14.9%, while the Nasdaq fell 11.4%. The S&P 500 demonstrated relative resilience with a more modest 8.3% decline. Looking at annualized returns, the Russell 2000 shows the most significant weakness, with a minus 48% annual rate over the past 3 months. Despite recent pressure, the S&P 500 and Nasdaq maintained positive one-year returns above 10%.
Checking out best and worst performing equities, I'm penny stock. Janover dominates with a 1,254% surge to 74.49, hitting new all-time highs. iCore Connect and Upexi also show remarkable gains of 681% and 388% respectively, though experiencing high volatility. The 3-month returns highlight Janover's exceptional performance with a 1,405% gain. Upexi shows strong momentum with a 195% return, while Regulus Therapeutics maintains consistent growth with 698% over the same period. Annual return metrics showcase Janover's staggering 59,618% ARR over 3 months. Regulus Therapeutics posts impressive 4,550% 3-month ARR, while Upexi maintains a solid 79% 3-month ARR. Among large caps, Palantir Technologies leads with a 37.9% monthly gain. Netflix hit new all-time highs, up 21.1%, while GE Vernova gained 22.4% with strong upward momentum. 3-month returns show Palantir leading with 45.8%. Netflix follows with 16.3%, while CrowdStrike posts an 8% gain. Most big caps maintain positive daily return averages. Long-term performance shows Palantir with an impressive 439% one-year return. GE Vernova and Netflix follow with 141% and 105% annual returns respectively. Femto Technologies leads declines, plunging 99.1% to 6.19. Enphase Energy and Janover Global Logistics both dropped over 97%, while Mullen Automotive fell 96.6%, all hitting new record lows. 3-month metrics show devastating losses across the board. Femto Technologies down 99.6%, Enphase dropped 99.4%, and Mullen fell 97.5%. Greenlane continues its 8-month losing streak. Leading the worst performers, Femto Technologies plummeted 99.1% to 6.19, marking a new all-time low. Enphase Energy and Janover Global Logistics both tumbled around 97%, with strong negative trends. Mullen Automotive and Greenlane also saw devastating losses exceeding 96%. Among large caps, Enphase Energy led declines, dropping 27.6% to 44.59, with strong downward volatility. APA fell 25.7% after breaking down from sideways movement. Alexandria Real Estate Equities and Charles River Laboratories both declined over 23%. Looking at daily returns, Celanese showed the highest daily volatility, averaging minus 0.6% returns over 3 months. APA and Enphase Energy also saw significant daily declines, averaging minus 0.51% and minus 0.43% respectively over the same period. Examining annual returns, Celanese posted the worst performance with an 88% annual decline over 6 months. Enphase Energy and APA showed annual rates of return below minus 70% over 3 months, indicating severe downward momentum.
And now on to U.S. sector performance, where consumer defensive leads with a 2.7% gain to 902.35, showing a very strong positive trend. Technology advanced 1.6% despite hitting a new one-year low. Utilities maintained momentum, marking its 4th consecutive monthly gain. Market breadth reveals mixed signals. Utilities shows healthy participation with more advances than declines across all timeframes. However, technology and industrials face significant declining stocks, particularly over the one-year period. Looking at returns, consumer defensive stands out with positive performance across all timeframes. Communication services shows the most volatility with a minus 13% 3-month return. Despite closing up today, utilities maintain stable returns near break-even. Annual return metrics highlight utilities with an 18.4% gain, followed by communication services at 15.7%. Technology shows concerning weakness in shorter timeframes, with a minus 33% annualized rate over 3 months.
Consumer defensive stocks showed notable strength today. Walmart led with a 14.2% gain to 97.25, showing a very strong upward trend. Philip Morris International hit a new all-time high at 171.36, marking its 4th consecutive monthly gain. Kroger also reached a new record high, extending its winning streak to 6 months. Looking at returns, Philip Morris International shows exceptional performance with a 31.5% 3-month return. Dollar General and Dollar Tree have rebounded in recent months despite negative yearly returns. Walmart stands out with a strong 63.9% one-year return. Annual rates of return show Philip Morris International leading with an impressive 203% annualized return over 3 months. Dollar General follows with a 188% 3-month annualized rate. Kroger maintains consistent positive returns across all timeframes.
The worst performing sectors showed significant weakness. Energy led the decline, plunging 12.8% to 617.48. Healthcare dropped 2.9%, recording a new yearly low. Basic materials fell for the 3rd consecutive month, while financial services and consumer cyclical posted modest declines. Market breadth reveals widespread weakness. Energy showed extreme weakness with only 15 advances versus 133 declines. Healthcare breadth deteriorated with 463 advances against 594 declines. Financial services exhibited similar weakness, with declines outnumbering advances by nearly 2:1. 3-month returns highlight the severity of recent declines. Consumer cyclical posted the largest drop at 17.8%. Energy fell 10.1%, while basic materials declined 5.9%. Healthcare showed relative resilience with a smaller 4.6% decrease. Annualized returns paint a challenging picture. Consumer cyclical shows a concerning 54.8% annualized decline over 3 months. Energy posts a 35% annualized drop. Despite recent weakness, financial services maintains a positive 20.9% one-year return.
Energy stocks experienced significant declines across the board. APA led the downturn, dropping 25.7% to 15.54, hitting a new yearly low. Halliburton and Schlumberger also reached new yearly lows, falling 20.9% and 20.6% respectively. All stocks showed strong negative trends with notable volatility. 3-month returns show substantial losses, with APA experiencing the steepest decline at -32.4%. One-year performance reveals a challenging period, as APA dropped 50.6%, followed by Halliburton at -47.1%. Hess showed relatively better resilience with smaller losses. Annual rates of return highlight the sector's weakness. APA shows the steepest annualized decline at -79.6% over 3 months. Halliburton follows with -69.4%. Hess demonstrates more stability with a more modest -39.1% 3-month annualized return.
Thanks for watching. I'm Max Profit, along with my AI co-host, Penny Stock. Please like, subscribe, comment, share. Cold Brew Finance is an experimental project with market reports written, narrated, and delivered totally by AI, with market data kindly provided by financialmodelingprep.com. Always seek professional financial advice before making any investment decisions. Check into the channel daily for coverage of stocks, crypto, currency, and commodities. Thanks for watching.